recent losing setup that I had on USDJPY, and my theory is simple. As I've shown you, the previous day was bullish, so I was anticipating bulls to continue to push price higher on this day. And based on my theory, whenever we have these, significant impulses, retracement, the market is basically creating a series of higher highs, higher lows. So when I wake up on Monday at 6 a.m., you can see we had just had this significant impulse, and the market had already completed what I consider a retracement. So after seeing this retracement, I'm expecting a possibility of a similar thing which we saw here. After the pullback, we're expecting a possibility of another bullish leg, just like you can see here as well. We had another bullish leg. So when I wake up in the morning at this point in time, if the market had not retraced, I would have waited for a pullback first. But in my opinion, by this point in time, if I'm to get any setup, I'm anticipating the market should possibly push higher and break above this previous high. And if that is to happen, if I get my setup anywhere around this area, it should have already hit my target with the new bullish leg. Of course, assuming price respects my direction. So long story short, by 6 a.m. when the market was at this point, I was looking for a W pattern, which is a double bottom, because that's what I use for my entry confirmation. And if you check here, you will see we had this selling candle, we had a bullish candle, selling candle, and this bullish candle. You drag this to the right and you'll notice it was somehow a double bottom. So the anticipation is that price should come back to this center point, which is the neckline. Then when price pushes back here, or rather does this pullback, I should be executing, anticipating more buyers to kick in from that level. And that's exactly what I did. I marked my neckline and waited for price to come and retest. This is the candle which came back to retest the neckline area. The candle was at exactly 7 a.m. Before I take my entry at the neckline, my final confirmation is that the previous 1 hour candle should also be a bullish candle in respect to the direction that I want to take that trade. So if this is 7 a.m. when we're having our retest, our previous 1 hour candle will be the candle that opened at 6 a.m. So we'll have to go to the 1 hour time frame, same date, 16th of June. Look for the 1 hour candle that opened at 6 a.m. No, this is 5 a.m. 6 a.m. is here. The 1 hour candle at 6 a.m. was bullish. So again, based on my criteria, that was a valid setup for me to take. So we move back to the 15-minute time frame where I'm executing, and it means when the retest is happening at 7 a.m., it was valid according to our strategy. Keep in mind, by that time we had not seen what the market will do next. So you're just following your playbook and staying disciplined, because at the end of the day, you just follow your rules as long as you've backtested your model and you've proven that those type of setups continuously will make you money. Then your work is just to make sure you're following your rules every time.